One of the most legendary investors in the world, Bill Miller, a billionaire, has come out and officially revealed that he has 50% or so of his personal portfolio in Bitcoin and about 50% of his personal portfolio in Amazon. That's right. Bill Miller has an incredibly heavily concentrated portfolio. He simply looks for assets that he thinks are durable, that will drive a great return over a number of years, and then he builds concentrated positions. Doesn't believe in diversification for his personal portfolio. And so Bill Miller, if for those of you that don't know him, literally is a legend. He holds the record for the mutual fund that beat the S&P 500 for 15 consecutive years. So from 1991 to 2005, every single year he beat the S&P 500 with a mutual fund as the manager of the Legg Mason Value Trust. From the COVID-induced market low of March 23rd, 2020 through March 31st of 2021, his fund returned 201% versus 78% for the S&P 500. And last year, or actually in 2020, Bill Miller said Amazon had grown to be 83% of his personal portfolio. Now, the reason why it's interesting is because Bill is famous. He bought Amazon on the IPO. And then when it crashed after the actual tech bust, he went in and he bought a material percent of that business when nobody wanted it. For those of you that don't know, Amazon actually fell over 90%, 90%. And Bill Miller stepped in and bought a material amount of the business at that moment and has held it pretty much till now. And that is why it's grown to be such a big portion of his portfolio. Now with Bitcoin, he has done something somewhat similar. He started buying Bitcoin in 2014 at $200, and he continued to buy it until it was at $500. From $200 to $500, Bill Miller was buying. Then he started to buy again in the spring of 2021 when Bitcoin was about $30K after it had crashed from $66,000. So after a big crash, he jumped in. Now, why exactly was he buying Bitcoin? Well, we have a quote here. He says, my reasoning was there are a lot more people using it now. There's a lot more money going into it in the venture capital world. There are a lot of people who are skeptics who are now at least trying it out. And then his thoughts in terms of what other people should be doing is he said, if you put 1% of your portfolio in it for diversification, even if it goes to zero, which I think is highly improbable, but of course possible, you can always afford to lose 1%. So pretty damn cool to see Bill Miller, an absolute legend, somebody who is an expert in terms of finding disruptive technologies that compound at high growth rates, obviously showcased with his Amazon investment. And now coming out and saying, look, I'm into Bitcoin, but I'm not just into Bitcoin. I've got almost 50% approximately of my personal portfolio in the asset, I think is a pretty big boom. And obviously that set the internet on fire when people see somebody like this doing that. Right, John?
Yeah, I think one thing to note here is one, Bill is a legend. That's very clear. I mean, he made 200% from the bottom of the market to the top of the market, while the S&P only returned like 80%. So he clearly knows what he's doing. He's done it for a very, very long time. So that cannot be taken with a grain of salt. But Bitcoin is 50% of his portfolio. It's obviously a lot of monetary value, but it's also in other stocks such as MicroStrategy and mining companies. So he's kind of getting involved in the whole ecosystem of it. It's interesting because when you read the headlines and it just says Bitcoin is 50% of his portfolio, you literally think that's in cold storage, just sitting on like a USB. So it is interesting to think. His notes on every investor getting exposure to the asset, I think, are right on target. 1%, you can't really, you can afford to lose 1%. No one wants to lose money, but you can afford it. So I think he's right on the ball with his comments here.
I mean, that's wild. 50% in Amazon, 50% in Bitcoin. That's just wild for someone who's worth that much money, a billionaire, to be doing something like that. I think a lot of people would say that's crazy. Like people think of the idea of like, hey, conviction helps build wealth and then diversification helps preserve it. And he has just completely followed the opposite of that, right? He says, these are the two things I'm highest convicted on. I think they have the most upside, the highest chance of success. They're two things that I really believe in, and I'm going to go all in. And you have to respect that. And ultimately, it sounds like the way that quote made it sound was he bought some Bitcoin back in whatever year it was, 2017, 2016, or no, 2014, right? Yeah, 2014 at $200, watched it up to $500 and continued buying. And then he started buying again at $30,000. So it sounds like he actually bought a smaller portion of his portfolio, and then it continued to grow and grow and grow and outsize other positions. And now ultimately he's left with two big things, which are Bitcoin related assets and Amazon. And it's two things that I think a lot of people have a high degree of conviction in, right? For these assets to continue to grow over time. So to see someone like this do that and not just be sitting sitting there in a diversification of stocks, bonds, currencies, commodities, and all these different assets, mutual funds, and all these different things, I think it tells you a lot about him as an investor, right? He is willing to go all in on the things that he believes in. And clearly, two of those things are Amazon and Bitcoin.
The other piece of, I think, his approach is that he actually holds this stuff for a really long time. Right. And ultimately, if you go back and you actually listen to the interview that he did, there's a 2-part interview that got put on YouTube. One is about stocks, and then one is about Bitcoin specifically. And the segment about stocks actually was the more interesting one to me because it showcases how Bill thinks. He's one of the clearest investment thinkers that I think people can learn from. And what he talks about in there is he says, look, let's say Facebook as an example. Facebook had grown in value, and that value, many people would have said is, oh, they're overvalued, right? The multiple is too high, et cetera. There's regulatory risk on the horizon. Well, he's like, but yeah, that got priced in because now the multiple has compressed, the stock has come down some. And so given the risks that they face and given the health of their business, it's actually like a pretty attractive kind of valuation, right? He goes through Google, same thing. And he goes through a couple of these companies. Then he talks about Amazon, which is obviously something he knows very well. And he talked about how Amazon is going through a high period of capital outflow, right? They're outlaying a bunch of capital in terms of all their logistics and transportation, building out all the warehouses. And he compares it to places like Walmart, where he's like, look, Walmart's been around for 50, 60 years doing this stuff. Amazon, in a short period of time, is going to have just as much warehouse space or a competitive amount of logistical abilities, et cetera. And so the reason why that's all important is because then what you get is you basically end up with a scenario that he's explaining, okay, they're going to outlay a bunch of capital today, but that's going to drive future cash flow, right? And that cash flow is going to be high cash flow, high margin in the future. So owning it today as a business is super attractive because they're making investments today that will pay off in the future. Now, again, whether that happens or not, I think is ultimately up to the market and to performance and all of that. But it like the understanding of how a business actually operates and the ability to not just evaluate it in a snapshot. A lot of people look at a business and say, well, how much cash are they making right now? What's the valuation? Oh, okay, this doesn't make sense because of XYZ reason. But he's like, no, I'm looking at this as a trajectory of a business or the story of the business. And I'm trying to understand when are they actually making high degree of investment? What's the potential payoff of that investment? And how will the profitability, cash flow, et cetera, in the future change? Again, some of this is like table stakes for legacy Wall Street stock investors, but there's a lot of people who watch this show and are kind of new to investing, and I don't think they quite understand, how to think about valuations today versus how that's going to move over time, and things like multiples and metrics, or multiples and cash flow, and how that can grow or evolve based on the investments you make today. And so as people become more sophisticated with that stuff, I think that's really where you start to, okay, like now you understand investing. Now you understand how to select assets. Now you understand how to think about whether something's positive, negative, and which direction it's headed in the future as well.